Opposition leader Peter Dutton has called for increased competition within the Australian insurance sector, citing the growing number of Australians struggling to afford home and car insurance. His comments, made during a Sunday interview on Sky News, follow recent devastating floods in North Queensland that exacerbated the affordability crisis for property owners, particularly those in high-risk flood zones. Many are finding themselves unable to secure adequate insurance coverage or are significantly underinsured for events like flooding, leaving them vulnerable to substantial financial losses in the event of a disaster. Dutton proposed extending the coalition's controversial divestiture policy, currently targeting major supermarkets and hardware chains suspected of price gouging, to the insurance industry. This policy, which threatens to forcibly break up large corporations as a last resort to combat anti-competitive practices, has proven highly divisive within the Liberal Party itself. Internal dissent arose when the policy was initially proposed, with some senior figures advocating for a broader, more comprehensive approach to addressing cost-of-living pressures rather than focusing on a sector-by-sector basis. The suggestion of applying divestiture to insurers has reignited. Critics argue that a more nuanced and holistic strategy is required to tackle the multifaceted challenges facing the insurance sector, rather than resorting to the potentially disruptive and legally complex process of forcibly dismantling large corporations. They contend that a sector-by-sector approach might create unintended consequences and destabilize the market without effectively addressing the underlying causes of high insurance premiums. Concerns have also been raised regarding the potential impact on market stability and the availability of insurance products should major players be forced to divest. However, supporters of the proposal, including the progressive think tank, the Australia Institute, believe divestiture could be a crucial tool in curbing inflation and alleviating cost-of-living pressures. They argue that the current market structure, dominated by a handful of powerful insurers, contributes to inflated premiums and limits consumer choice. The concentration of market power, they say, allows these large insurers to maintain artificially high prices, leaving consumers with little recourse. The Institute points to the fact that despite the numerous brands offering home insurance, the majority are subsidiaries of just four major players: AIG, Suncorp, Allianz, and QBE, collectively controlling approximately 75% of the market share, according to consumer advocacy group Choice. This lack of genuine competition, they claim, fuels price gouging and leaves consumers vulnerable. Dutton's proposal highlights the complex and multifaceted nay. The challenge lies not only in ensuring affordability, but also in maintaining market stability and providing sufficient insurance coverage to protect Australians from the financial risks associated with natural disasters and other unforeseen events. The debate surrounding the divestiture policy underscores the need for a thorough and carefully considered approach, one that balances the need for increased competition with the potential risks of disruptive interventions. The long-term implications of applying such a drastic measure warrant serious consideration and a comprehensive assessment of its potential benefits and drawbacks. A holistic strategy, taking into account the broader economic and regulatory landscape, is crucial to ensure a sustainable and equitable insurance market for all Australians. The conversation surrounding the affordability and accessibility of insurance remains critical in the ongoing discussion about cost-of-living pressures and the role of government intervention in regulating key sectors of the Australian economy.